If you own a home in Canada, it's very important that you know what guaranteed building replacement means. It could be the difference between saving tens of thousands of dollars in the event of a covered catastrophe to your home. In today's video, we're going to be covering what guaranteed building replacement means, why you need to consider it as a homeowner in Canada, and some of the most frequently asked questions around this topic. So let's begin. Basically, it means that if your home is destroyed by an insured peril, the insurance provider will rebuild the home, even if it costs more than the limit stated on your policy. This is a very important coverage provided by many home insurance policies today, and it's much more advantageous than extended building replacement because it guarantees its rebuild. With extended building replacement, which is much more common in the United States, coverage is still only up to a specified limit and does not guarantee all rebuild costs will be covered. So in Canada, it's important you make sure you have guaranteed building replacement. Be aware that you must comply with certain conditions in order to be eligible for this coverage. This includes insuring your home to 100% of the replacement cost value. And if you're not sure of this, you can talk to a home insurance agent. They'll have the tools and evaluation metrics to determine this for you. You'll need to make sure you notify your insurance provider if you make any changes to your home beyond a specified amount. For instance, if you renovate the kitchen or finish a basement, these could increase the value of your home, and your insurance provider will need to adjust your policy accordingly. The third condition is that you accept yearly changes to your policy. If inflation or other factors have caused the rebuild value of your house to increase, your insurance provider may need to adjust your policy accordingly. These restrictions may vary from each home insurance provider, so you'll want to make sure to review this with an agent. If you don't comply with some of the conditions, you could only have coverage for the limit shown on your policy. And in the event of a catastrophic loss to your home, you could be facing a large out-of-pocket expense without guaranteed building replacement. You'll also need to consider that some home insurance providers don't have guaranteed building replacement for rental properties or vacation properties. However, at Square One, we offer guaranteed building replacement on all our policies in Canada. So it doesn't matter if you have a vacation property or a rental property, you'll still receive guaranteed building replacement coverage. An example, you've just been to see your home insurance agent and they helped you calculate the replacement cost of your home. However, you're surprised that this replacement cost is a lot more than you originally paid for your home. Well, there are several reasons why this replacement cost value can be different than the price you paid for your home, and here's why. 1. If a developer built your home, they most likely built several in the area and were able to purchase materials for building in a large quantity and thus receiving big discounts. However, if your home suffers a large loss, you won't be able to purchase these materials in bulk and thus won't receive the previous discount that the developer may have gotten. After a loss, there'll be an expense to remove any of the damaged property. This is known as debris removal. This also needs to be accounted for in the replacement cost value. Luckily, an insurance agent can help you determine the rebuild value of your home. You'll also want to make sure you let them know if your home has any special features, such as granite countertops, rock fireplaces, or anything other unique in your home. There are no laws dictating that it's mandatory for you to have guaranteed building replacement on your home. However, in the event of a loss, guaranteed building replacement could save you tens of thousands of dollars of out-of-pocket expenses should the rebuild value exceed the limit on your policy. In addition, the last thing you want to worry about in a major catastrophe such as losing your entire home is if you had enough coverage. Also, guaranteed building replacement coverage takes into account any bylaw changes. That way, Any mandatory requirements to update to your home are included in the coverage. Replacement cost is always the number that will best indemnify you should you have a claim. In other words, the goal here is to restore your home to its original state before the loss actually happened. The main difference between guaranteed replacement cost and extended replacement cost ultimately lies in the coverage that will be provided in the event of a loss. With extended replacement costs, there is a predetermined percentage of the original coverage that will be provided above the limit. So in the event of a total loss, there is still a possibility that you could be paying for expenses out of your pocket if the rebuild value was significantly beyond the extended replacement cost coverage. Guaranteed building replacement, as the name implies, will provide guaranteed coverage for the replacement of your home in the event of a covered loss. Simply put, guaranteed building replacement coverage is one of the most comprehensive types of coverage you can have. So thank you for watching, and I hope now you have a full understanding of what guaranteed building replacement is. So if you're a homeowner in Canada and would like a home insurance quote that includes guaranteed building replacement, you can head over to squareoneinsurance.com.